So therefore, to kick us off and to start, I'd like to turn things over to Gaetan, have him give himself a little bit of an introduction, and then get us started. Gaetan.
Hi, thank you, and good evening to everyone. So I'm based in Asia. I'm 53. I've been working in the capital market for over 25 years in different roles, both in Europe and in Asia. I did retire 3 years ago, and my focus has shifted towards trading. And naturally, trading became the excuse for me to get into AI and to see how the two could be combined. So what I propose to do now is maybe to give an overview of where AI is touching finance. And I think that could set the scene for the two companies which will speak after me and to see where do they fit and maybe where are the opportunities within the financial industry for fintech or AI related services. So let me share my screen. I hope it will work properly. So let me see if I can move from one slide to the other. Yes. So the presentation will be quite brief, and I took the arbitrary decision to just select few touch point or area, which is probably visible to most people looking at finance, AI. It's not complete or exhaustive, but it could give, I would say, a good snapshot of where some opportunities still are. The very first one that we are all familiar with would be chatbots. We find that in all companies. Banks are no exceptions, but fair to say that banks are seldom at the forefront of developments. So from early PIBX in like 25, 30 years ago, to a move to call centers in low-wage countries such as Philippines, Malaysia, India, uh, to now, I would say, bots answering in multiple languages, but still very, very basic questions, to soon potentially over realistic avatars being able to answer in natural language any questions. That will be very likely the future. We do see today already some training being delivered by a realistic avatar in any language, any gender, just for the sake of uh, making it more perfect than what a human would do. This has two benefits. The customer experience is greatly enhanced and the labor cost is drastically reduced. Another area which is much more sensitive and which might be also related to the development of AI is fraud detection. So what we can see is that there are two main areas. The first one is uh, financial transaction monitoring to make sure that nothing dangerous or illegal is going on, but also some tools to facilitate the onboarding of new clients or the renewal of the Know Your Customer protocol, which has to be done on a regular basis, depending on the profile of the customer. No doubt that AI algorithm can detect patterns which could be more easily recognized as suspicious, and also to collect information from multiple sources to complete the background check of a new client or an existing client. One thing that we can observe on a daily basis as well is the biometric authentication. When we log to our computer, to our phone, we use either our thumb, it could be face recognition, it could be retina recognition, it could be even bone density recognition. I'm not sure I said it right, but I saw some mock-up of this kind of service, detecting the bones in the hands as a way to identify a person. But also we see a shift towards behavioral biometric, which is slightly more interesting because it's something that we are probably less familiar, were actually systems which could be your own computer, which could be the receiver in a shop where you tap your card in order to pay. Um, those will be able now to detect your mouse activity, your keystroke movement, your touch screen behavior, your device movement, so the gyro, the orientation, the way you scroll. And sometimes we already start to see that we need to identify that we are not a robot. So those are just the beginning, but this technology is definitely showing great potential and will only further develop. Another area which is quite important because I think that the demand was growing. Today, a lot of bank or insurance customers are not convinced anymore that the recommendation from their financial institution is really for their benefit. But often, the product being recommended will be the one bringing the highest commission to the financial advisor that you may find. Um, so this is becoming, I would say, an issue which is not challenged by the less savvy investor. But when people get a bit older or do have a bit more money, suddenly they start to pay attention to the fees they pay and to the return they obtain. So there are two potential way this sector will evolve. The first one will be financial advisor will onboard AI tools in order to develop personalized portfolio investment for the customer based on the risk profile and risk appetite. That would be using technology to offer a greater services and justify the fees that they take. But there is also another possibility, and we see a lot of application blossoming on the internet today, allowing the investors to define his own parameters in terms of risk profile, investment preference, and to build his own portfolio directly online. And a platform will simply, according to his preference, operate the buy and sell on his behalf on a totally automated basis. So it's one level up. People used to invest in investment funds paying high fees to fund manager. They move to ETF into trackers, which are not dynamically invested, but just following an index, although those products are getting more sophisticated, to a fully disintermediation of the fund manager, which is to manage your own portfolio through a platform having lower fees, and ultimately you are responsible for your gains of or your losses, but you do not pay someone regardless of whether you make or lose money. So that's an evolution that we can see today. The last area I want to mention is something which is a bit closer to my heart. Since I retired, I started to day trade. And day trading is about risk management and controlling your own psychology, I would say. So risk management, you can apply mathematics. It's quite binary, but psychology is a bit more complicated. The way to address that to the full extent is by replacing the, the manual decision by an automated process. And you have multiple ways to do that. Financial institution, front office are using for a long time already quantitative trading, which is simply the definition into a code of an investment or a trading strategy. So in front offices, you will have on one hand the trader, on the other hand, you will have the mathematician or the coder, and this is where they will try to code the most profitable strategies for the time that they will work until they need to be refined. Today, it is possible for almost anyone to connect to a broker. Most broker applications do have API allowing you to connect your own code to your brokerage. So you can do, if you know Python or other language, you can code your own strategy. If you're not that familiar, you can even ask AI to help you to generate the code. You can even ask AI to help you to define strategies. So of course, there is no guarantee, but by combining those resources, you can do something which was impossible just a couple of years ago. Um, and now what we see is that platforms are again blossoming, which do not require you to know any coding. You can say in natural words, in natural language, the parameters you want to set for your strategy, and the platform will code it for you, and you can automate the trigger of buy and sell orders, or simply of alert in case you want to keep the hands on the release of your order. So those are just few examples of application of AI to the financial world, but this lies on two key principle, or I would say milestones, where probably lies the most of the opportunities. The first one is the data preparation. And fair to say that financial institutions, especially banks, um, do have a lot of legacy systems. And what they do when technology evolves, they do not replace those legacy systems. They just add new system, new technology, new languages. And 20 years later, banks today end up having hundreds of different systems, data in different systems which are not communicating to each other. And if you want to be able to harvest the data you have in your own company through AI, the first thing you need to do is to clean and harmonize those data which are coming from different sources. The one of the presenters today, Stappers.io, I think is doing just that, and maybe will explain to us the steps that they are taking. One observation as well, we know that training a language model can take a lot of times and a lot of data. Today, my understanding is that the most advanced model are reaching the end of the available data in the world. So now there are initiatives which are aiming at collecting the data which are not today captured on the internet. Those could take two forms. It could be the recording, for example, of conferences where you do have experts, um, thought leaders explaining their view, which could be at the forefront of the development. The idea would be to simply record those conversation and to make them available to the AI during their training. Another development that we see, it's the generation of synthetic data, where you would have, for example, an AI playing a video game, but against itself. So it will create iteration of the same game, trying different setup until it will optimize its behavior and will be able to complete a game in the most efficient way. This is also used by the military in order to test different combat scenes and to see what would be the best way to win a fight using drones, weapons, or infantry. So the different ways to analyze data, I think that the next speaker can go much further than me, but you do have regression, clustering, neural network, which is more using the way a brain is operating instead of pure mathematics. This is what we have observed when at first computers were trying to play chess and beating chess masters. When they enter into the game of Go, that was no longer possible because it was not a question of mathematics anticipating the few movements ahead, but the system had to think like a human in order to be able to beat grandmasters at the game of Go. So you have different ways to do that. An interesting development is The Bitcoin miners who do have state-of-the-art computers realize that every 4 years, when Bitcoin is going through what we call the halving, where the new generated Bitcoin will only provide half of the revenue they used to provide, which is an embedded um, development or component of Bitcoin, are looking at leveraging their armadas of computers to help developing ways to train large language models. So this is something which was unexpected, but which will also help greatly the faster development and training of large language models. The second point, when the data are clean and harmonized, well, you need to train your machine learning. And again, you have different ways to do that. Um, I mentioned the way to analyze the data, but typically when it's about the training of a language model, you have three main options. The first one would be the usage of an commercial API. Like I mentioned, when you want to connect to your broker, you will use an existing API. You can use an open source large language model and add your domain-specific data in order to train the model to your own needs. Or you can use a pre-trained LLM that you develop in-house with the help of consultant. So you have different approach. In the banking system or the financial industry, there is an opportunity, which is most of the system you want to develop will be based around your clients. Your client information is private and confidential, meaning that you cannot use a language model which will be shared with your peers or competitors. You will have at some point in time need to develop your own system. So today, bank will use those data. It could be for cross-selling to identify which client is not yet using all the possible services that a bank is providing. It could be for investment to predict some modeling in finance. Uh, some examples of the harvesting of big data could be Google, who can predict epidemic before they occur just by looking at the number of iteration of a specific word or symptoms being mentioned into emails. It allows them to detect an epidemic at the very beginning and to identify the epicenter. It also permits to identify regulatory changes, and I think that one of the speakers will cover that, or even trends, as what we see on the former Twitter, X, or Wall Street bets, or even Instagram. When something is being repeated, it becomes viral and it reinforces its visibility. So this is what we see with those elements. So all those benefits and opportunities come with challenge, of course. The obvious one would be data privacy, algorithm bias, as we have seen a lot in the press recently, deepfake, which we see especially in the political world, or into sophisticated scam, ransom, pretending that a child has been kidnapped, copyright, impersonation, regulatory compliance, all those are the obvious challenge created by AI. Um, Other consideration is, of course, the risk of political abuse through AI tools. We have seen recently in the US the identification of spending of people being present in Washington on January 6th to be identified. We have seen in Canada the truck drivers who went into a protest having their bank account being frozen. We have seen in Scandinavia half of the owners having an electric car discovering one morning that the car would not start, and that was controlled by the government. Um, we have the risk that corporates, such as insurance companies, may have access to medical data and refuse to grant an insurance to someone who might have a precondition. So those are the obvious risks and ethical consideration that we will have to deal with the development of AI. So the future is definitely quite exciting, especially in finance. There is a lot of room for development. Banks are using old systems. They are never at the forefront of development. And what we have seen recently, it's mostly acquisition of startup, fintech, in order to upgrade their game more rapidly. Um, we will see, of course, probably the development of blockchain technology, multiplication of crypto, tokenization will be boosted. Um, and I think that this will be challenged by the next disruptive development, which will be when AI will be combined with quantum computing, because everything which like encryption suddenly will become challenged, and we will see whether crypto tokenization will resist or if that will create new opportunities for new development based on quantum technology. So this is just a few key points I wanted to share, maybe to set the scene for the future speakers, and then we can have a conversation afterwards.